This is Back Roads of Illinois server to farmers and ranchers in central Illinois and the Midwest. We're glad you're here on today. I'm Cesar Delgado on today. The world supply and demand report was bearish on Monday, but there is some concerns about the number, and bearish to the grains markets and counting on the fundamentals. He is the bear in the room is our friend Chip Nelinger from Blue Reef Agri Markets. Chip has explained the corn yield from the world supply and demand report from the Department of Agriculture. This Back Roads of Illinois server to farmers and ranchers in central Illinois. The world supply and demand report was bearish on Monday, but there is some concerns about the number, and bearish to the grains markets and counting on the fundamentals. He is the bear in the room is our friend Chip Nelinger from Blue Reef Agri Markets. Hey Chip, how are you?
Hey, doing well, Caesar. How are you doing?
Are you going to be bearish on today?
Well, it's hard not to be after that USDA report on the 12th. You just no help whatsoever. So from a numbers standpoint, it's hard not to be bearish. However, we've digested a lot of that bearish news. We've I think gone a long way at digesting a massive Brazilian bean crop, and the markets are holding their own in here. So I'm still a little optimistic. We might have a little short run upside, but that report came out of left field and probably did take away a lot of the potential upside, at least in the short run here over the next 2.5 months, say.
What is your concern about supply from the 12th?
Yeah, well, the biggest concern of that is it just took away our opportunity. They went up a half a bushel on corn yields. They added 1.3 million acres to the harvested number on corn. So probably the biggest concern is it just took away maybe the potential or the need for the market to rally. Now, something could always happen, a trade deal or some China news or a big energy market rally to drag the grain markets. But the biggest concern is we don't really have much to rally on now that report was released, and the stocks are more than ample for the time being. So probably don't have a whole lot of upside, unfortunately.
How is the fundamentals trends in the corn markets, especially since the report?
Yeah, well, the demand is enormous. And since the drop in prices after the report, we have seen corn exports really see a big uptick. And so that is a bright spot. The demand is really good, and these lower prices are stimulating some demand. So that's maybe the bright spot is there's really good demand out there on the corn side, really good crush demand on beans. Crush margins have improved. But I'd say that's probably the friendly spin on it is the demand side. But to counter that, unfortunately, there's plenty of supply to counter that demand as well.
Of course. I visited you on a call from last Monday morning about the report from the Department of Agriculture, of course. However, do you have any questions about the yields trends that we were moving forward with it?
Yeah, the biggest question is no one had that on their card, right? That was a half a bushel on corn above the highest estimate. I think most people thought we'd see a 2-3 bushel decrease. So I do have a lot of questions as to the accuracy of that number. However, the USDA theoretically has access to more data. They survey farmers. So those, unfortunately, in spite of some concerns and questions I have, those are the numbers that the market's gonna, take as the gospel and use as the final numbers. We won't get any changes on that. So the January crop report kind of ends the debate there. That is what it is. Unfortunately, whether you like it or not, or whether you believe it or not, that is what it is.
Yes, it is pretty hard to process. But what is your position on the planting intention report on March?
Yeah, it's a real wild card. It's as big a wild card as I've ever. Because of all the uncertainty, costs are high. High production, highest yielding ground probably leans towards corn. Lower yielding ground, especially kind of in the south, maybe more beans. I think it opens the door up for an argument either way, and probably means we could see a big shock one way or the other at the end of March when that report is released. I just don't know. I think it's a wild card. I think there's so many variables that we're going to have a wild difference of opinions on planted acreage. So that might have a tendency to maybe give us a shock, maybe give us a rally potentially if the corn number comes in, on the low side.
How about the beans production? Are you concerned for the beans?
Well, the bean number, they didn't really do anything. They added 100,000 acres, yield unchanged. They dropped export demand just a little bit. So it wasn't quite as shocking on the beans as it was corn. Stocks to use ratio still very tight at just under 9%. So the bean number was pretty neutral, but to counter that, we're just knocking on the door of a massive harvest in Brazil. They're just getting started, and it looks like that's going to be a record crop. So that kind of hangs over the market a little bit.
Sure. Yeah. Could you tell us what is the technical aspect on soybean futures for this month after the holidays?
Yeah, beans are interesting. We've seen soy oil rally into a nice new uptrend. It has drugged beans right up to the 200-day moving average. So the next couple of trading sessions are going to be important for beans. If they can see a close or two above the 200-day moving average, it may kind of build some momentum to the upside. If they fail right here and can't push through and close above the 200-day moving average, that could lead to a whole nother leg lower. So I think you're at an important point here where we need to watch pretty closely what happens the next couple of trading sessions in the bean market.
How is the cash grains markets for today's market in central Illinois, Chip?
Yeah, basis levels are holding in there because of the big drops we've seen, especially in corn. Hasn't been a lot of movement. So the basis is holding together pretty nicely. But, obviously we've had a drop in prices, especially in the case of corn. So, they've net lost a little bit of value, but basis is holding together because there hasn't been a huge flux of farmer selling because of the lower prices.
How is the fundamentals on the cattle markets with these prices for this year?
Yeah, still tight supplies. That's going to underpin us. Good demand for feeders, tight supplies, tight number of cattle on feed, some of the lowest we've seen in 15, 20 plus years. So that's going to continue to underpin us. But we've seen that a tweet, tariff news, Mexican border news can really wreak havoc on the cattle market. So Still need to be really willing to manage risk. Otherwise, fundamentally, the cattle market seems to be in a good footing right now.
How is the fats on February cattle?
Yeah, we've kind of caught up with where the cash market is, kind of sitting here in the 232 range. So in the short run, it looks like maybe we're at an equilibrium point, but again, I don't think we can drop too far to the downside, barring some sort of you know news tweet or something like that, just because the numbers are so tight, clear on into maybe the middle half of the year.
Do you have any final thoughts about the corn demand for export?
No, not really, other than it's good and it should stay good for the foreseeable future. We're about the only place in the world with corn supplies right now. So it's hitting on all cylinders. Export, ethanol demand strong, feed demand looks strong. Fast forward 3 months here, the Brazil second crop corn production is going to be an important piece of that. A big crop, they export that. If it's a shorter crop, it means maybe some more export business for us. So that's going to be something to watch, is how their second crop corn season goes. March, April, May.
Thanks, Chip. I enjoyed our conversation for today.
Thanks for having me, Caesar.
Chip Nelinger from Blue Reef Agri Markets in Morton, Illinois, on back roads of Illinois.